And we are live.
Good afternoon, everyone. Welcome to our webinar, The Financial Support Available During COVID-19 and Beyond. My name is Ben Law. I'm the Managing Director at 123reg. The ongoing COVID-19 outbreak has been creating unique challenges for businesses throughout the world. And locally, as the UK government grapples with lockdown phases and additional support packages, many companies are unfortunately continuing to struggle with the economic fallout, and one which could last for many months to come. Although the government has launched multiple schemes to assist freelancers and companies of all sizes, it can be difficult to make sense of it all, especially if you're fighting day to day to keep your business afloat. To help with this, we've joined up with the online accountancy firm Crunch. They're here today to share their financial and business advice. In terms of administration for the session, we will be recording this session so you can access the content at your leisure in the future. And we'll be hosting a Q&A session at the end of the session to get you access to the team and for you to ask any questions you want. Having said that, you can ask questions as we go through on the Q&A panel on your screen. So without further ado, I'll pass you over to Jake and Michael from Crunch.
Thanks very much, Ben. Hello, everyone. Thank you for joining today. Thank you to 123reg for inviting us. We've got quite a lot to cover today, so I'm going to jump straight into things. So just a brief introduction to who Crunch are. So we, as Ben said, we're online accountants based in Brighton. We've been going for just over 10 years. We look after about 10,000 clients with our accountancy and about 30 or 40,000 other people as members of Crunch Chorus, which is our sort of bank of resource and support and knowledge available for free on our website. Our website is one of our most popular tools and has about 9 million page views from about 3.5 million people each year. And one of the reasons that we're here today is because we have been making sure that we keep up with everything that the government's doing with its coronavirus support. We've published an awful lot of articles since February 2020. We've had about 160,000 views of our COVID-19 support material already. So we know that that people are keen to understand how all of this works, and it's constantly changing. We've had a very, very busy week with the announcements that the government made at the end of October and early November, and we've tried to make sure that everything is as up to date as it can be. It looks as though the pace of change hopefully will pause for a little. I think they've pretty much just got out the latest support, and that is probably going to be in place until sort of March time. So what we're going to cover today is the main government schemes that are available, what other government support is available outside of those main schemes, and then we're going to move on to coming out of lockdown. So what are you going to need to do for your business to make sure that you survive through and beyond, and just talk about some of the useful resources that are available out there. So just quickly, we thought it'd be really useful to sort of recap the support that is available to people. We're going to go into most of these things in a little more detail as we go through. So this is a whistle stop, really. The main one for businesses is probably either the coronavirus job retention scheme, otherwise known as the furlough scheme. That is available if you are a limited company director or if you have any employees. It's not available if you're a sole trader or you work in a partnership. There's a different scheme for you. The scheme is still open. In fact, a new version of the scheme went live on the 1st of November, and you were able to make claims as of yesterday. I think they've just put their claim scheme available, and that is due to end on the 31st of March 2021. When it will be replaced by a new scheme called the Job Support Scheme, which was all set to come in for the beginning of November, but is now not coming in until CJRS closes. We haven't said what date that will be because the government are changing their mind fairly frequently on the CJRS scheme. So that's available to anyone that has employees, and that can include, as we said, directors of their own limited company. The other scheme, main scheme that's available for support is the Self-Employed Income Support Scheme, which is still open at the moment. There's going to be a third grant available for the 3 months from November, December and January. We'll go into that in a bit more detail when we get to it. Then some of the other support, there are loan schemes available. So the bounce back loan scheme is the one that's most appropriate for most smaller businesses. That is still open, and even if you've taken a previous loan, you can still do a top-up loan if you didn't take the maximum amount. For larger businesses or for larger amounts, there's a coronavirus business interruption scheme. We'll cover that later, so I won't go on it now. The government announced delay to VAT payments for any businesses that were VAT registered. The deferral was for payments between March and June. So that deferral period is now closed, but you don't yet have to pay back those VAT deferrals. There is a delay to filing your company accounts and paying any tax. We'll cover that a bit later on. You do need to apply for the delay to paying, but it's automatic if you do apply. There are statutory sick pay rebates. So if you have any employees and you need to claim for any of them who are off sick, then due to coronavirus, you can actually claim up front, whereas previously you'd have to pay and then reclaim. There was a delay to your self-assessment payments. Anyone who does a self-assessment should know that, as well as the payment that you normally make in January of each year, there is also a payment on account that gets made in July. Well, this July, the government announced that there was a deferral of those. So the payment that was due on the 31st of July was deferred, and they've announced that there is also going to be an extra 12 months available through their time to pay scheme. We'll cover that a little bit later. If you're not eligible for either the furlough scheme or the self-employed income support scheme, and you're not able to work for whatever reason, then really the only other thing that's available to you is going to be universal credit, and the government have announced sort of extensions of that universal credit. There's a slightly higher amount and a slightly lower minimum income floor. That is quite complicated, universal credit. We're not going to really be focusing on that in this webinar. And then another thing that may well be useful for people is mortgage and loan payment holidays, which can be payment holidays for up to 6 months. You just need to speak to your lender. We'll cover those a little bit further on. In terms of the government support available, it is quite complex which one you can and can't apply for. We'll cover the main schemes as we go through them, but there is a tool at gov.uk, the Business Coronavirus Support Finder, that you sort of answer some simple questions, and it confirms exactly which of these schemes you may or may not be eligible for. So we'd recommend that you look at that as well. So what I'll do now is introduce Michael, who is our senior technical accountant at Crunch. He's our guru that makes sense of all of these schemes. So he had a full head of hair before the government announced any of these schemes, and I think he's pulled most of it out over the last month or two, as we have seen continued changes. But as we said, the main scheme, if you've got employees or you're a limited company director, is the Coronavirus Job Retention Scheme. This slide explains the support that's available for claim periods after the 1st of November. So as we said before, it's for employees, including limited company directors. It only covers usual salary that's paid through pay as you earn. So it does not cover dividends if you're a limited company. That has been a source of much angst for limited company directors, and in spite of repeated requests from a number of MPs and most organisations that deal with limited company directors have been calling for support for dividends, but I'm afraid the government show no sign of any support for dividends being available, which means it just covers up to 80% of employee wages, and that amount is capped at £2,500 each month. And in order to be able to claim, you must have submitted payroll, which is known as sort of real-time information payroll, with HMRC between the 20th of March 2020 and the 30th of October 2020. So as long as you have done payroll and submitted it to HMRC at some time between those dates, you should be eligible. There are other eligibility criteria, but it's important that you've done some payroll before the 30th of October. Michael, is there anything else you wanted to cover on this scheme?
I think the other best to cover would be that for employers who've already, let's say, made some of their employees redundant, they can't re-employ them and then basically put them on furlough anyway. But the employee should have been on payroll as of the 20th of September 2020. Now, there's also, for those who are new to the furlough scheme, in terms of housekeeping, you need to arrange your working hours with your employee. So this has to be agreed. How many, if you're going to do, whether it's going to be the flexi or the full-time furlough, this has to be agreed with the employee and then also reinforced by the contracts. HMRC can basically check this at any point in time, just to make sure that people aren't abusing the scheme. So I guess that's the only thing to probably add on to that.
Right, yeah, okay. And what the government have said for now is that the 80% coverage is going to be in place until at least the end of January. They're going to re-look at how things are going with both coronavirus in the UK and also just the state of the economy to see what the level of support will be after the end of January. For anyone who has been claiming on this, they'll know that, again, for this scheme, the coverage started at 80%, but then it actually, in September and October, it came down to 70 and then 60%. So the good news is that it's gone back up to 80% for November, which means that an employer doesn't have to pay anything towards the employee's wages. They just have to be paying the employer's national insurance and pension contributions, as we say on the screen here. So I'm not going to cover any detail on this next slide, but we wanted to have it in the slide deck, which will get shared with you afterwards. The main reason for having this slide here is just to confirm what cover was available for claim periods before the 1st of November. One really important thing to remember, if you have been claiming under this scheme and you have any employees that you are currently claiming for, your final claim for the period up to the 31st of October has to be made by the 30th of November. So that's just the one really, really important date to know for claims before the 1st of November. And one other thing that we thought it was worth saying is they had previously announced that there was going to be a thing that they were calling the job retention bonus. So this was going to be £1,000 bonus for any employee that you had previously furloughed who was still on your payroll as of the end of January 21. Because they have extended out the coronavirus job retention scheme, they've said that they've suspended this job retention bonus. So the £1,000 that employers thought they might be getting in January, that's been temporarily suspended. They haven't yet announced whether they're going to bring something in. They have said that they will look at whether they should. So I think it's possible, but we don't know for certain. So that's if you have employees or you are a limited company director. That's the scheme that's available to you. If you are self-employed as a sole trader or you work through a partnership, not if you work as a limited company, then there's the self-employed income support scheme. So this is a series of taxable grants based on your average self-employed trading profits. The way they calculate this is actually based on what your profits were over the 3 previous tax years. And anyone who does self-assessment will know that you complete your self-assessment by the 31st of January after the tax year it refers too. So in order to be able to qualify for this self-employed income support scheme, you have to have submitted your 2018-19 self-assessment. So that's not the one that's going to be due this January, it's the one that was due the previous January, and I think they gave you up until April for any late filers. But for anyone who is newly self-employed and has not yet submitted a self-assessment, I'm afraid this scheme does not cover you. If you are covered on the scheme, then hopefully you've already claimed the first two grants. The first grant was up to 80%. The second grant was up to 70%. The claim dates for both of those first tranches are now closed. If you were eligible and you haven't claimed, I'm afraid you've missed out. But if you haven't claimed for them and you become eligible for them, i.e. you are self-employed, you have submitted your 2018-19 self-assessment and your business is affected by coronavirus, you could still claim for the third grant. If you've claimed for the first two, you're likely to still be eligible for the third grant, which again is going to go back up from the 70% of the second grant to 80% of your average profits, capped at £7,500 for the 3-month period, November, December and January. Michael, is there any more detail that you think you want to cover on the self-employed income support scheme?
Yes, you mentioned earlier on that they should have filed their 3 previous years self-assessment. So that's 16, 17, 17, 18, and then the 2018, 19. Now, for those who didn't file the 3 previous years, they could have maybe filed 2 previous years. So the average profit will be based on the 2 previous years. If someone had only started being a sole trader in, let's say, the 18-19 tax year, then they would have used just the 1 year to work out what their average profit was. I think one other thing to mention is that HMRC have also firmed up the guidance on this one by stating that your business should have been adversely affected. So adversely affected, their definition of that was either having lower income due to COVID or having higher cost. So this basically is the requirement you also need to have met.
Yeah, it is slightly vague exactly what that means, but you do have to have, as Michael said, you have to have shown that there has been a material impact on your business, either through lower orders or higher costs. So hopefully that makes sense to people. When the CJRS scheme comes to a close, which is currently scheduled to be the end of March, it will get replaced by this new job support scheme, as we said. Because that is still some months away, we are not going to cover a huge amount of detail on this scheme, but it's effectively, although not a direct replacement for the CJRS, it will be replacing it when it does come in, and there'll be 2 versions of it. This version for businesses who are open that we've got here, it's going to be significantly less support is what they were planning, but obviously things didn't turn out the way the government were expecting. So there is a scheme for open businesses, and then this next slide, which will be in the deck for you, is a scheme if the business is due to close. And I think probably the best way to characterize what you would have got or what you might get from the job support scheme when that comes in is that everyone is slightly worse off than they were under the CJRS. The government would give significantly less support. So an employee would normally get around 2/3 of their salary, whereas on the CJRS, the employee gets 80% of their salary. And so, you know, on the job support scheme, the employer is going to have to contribute more, but how much they contribute depends on whether their business is open or closed. But I don't want to spend too much time on that, because the likelihood is that this scheme could well change again before it comes in, and the earliest it's likely to come in is April 2021. So we won't spend any more time on that scheme here. But one of the things that we definitely think it's worth covering is the loan support that's available to businesses. So I talked about them briefly. There's either the bounce back loan or the coronavirus business interruption loan scheme, which is got an acronym of CBILs, I think, which always makes me think of faulty towers. But this is available to almost any UK small or medium business, both of these, for loans between 2,000 and 5 million. The bounce back loan scheme is actually between 2,000 and 50,000 or 25% of your turnover, whichever is lower. That can get paid back over 10 years. They extended the payback period a few months ago. It's 100% government backed, which makes it much easier to access. There's no interest or repayments in the first 12 months, which does make it an extremely attractive way to get money for your business, albeit this is a loan rather than a grant, so you do have to pay it back at some point. And I think one thing it's worth saying that recently they've announced that you can top up a bounce back loan if you didn't take the maximum that was available to you before. So you may have had a loan but not taken the full amount you could have taken. They've now announced that you would be able to top up those bounce back loans. The second scheme, the CBIL scheme, that's only 80% government backed. So you, with both of these loans, you have to find a lender. The money doesn't come directly from the government. You have to find a lender, and the list of lenders is available on the gov.uk website and in our articles that we've got links to. The first scheme is easier to get because it's 100% government backed. This scheme, you can borrow much more, but it's only 80% backed. So you do have to go through sort of commercial underwriting procedures to see whether they'll actually make the loan to you. But you can then access up to 5 million. So that's a sort of a broad outline of those schemes. It's always worth considering whether taking a loan is the right thing to do for your business. There can be, other challenges or other impacts on your business if you do take a loan, but we are definitely thinking that especially the bounce back loan is certainly a very, very cheap way to access money if your business needs it. Michael, is there anything you'd want to add about either of the loan schemes?
No, you've covered it.
Okay, yeah, it's again, speak to your accountant or if about whether it's going to be sensible for you to do this. But genuinely speaking, you're not going to find a cheaper loan somewhere else. Would be our advice, especially on the bounce back loan scheme. So we'll just a little bit more detail on the other support. I don't know if you want to take this one, Mike. It's a bit more technical.
Yeah, the first grant basically was paid out sometime in March anyway. So if you haven't received that one, that's a bit late now. But I guess most of us would remember that recently they introduced the tier system where we had Manchester Mayor basically fighting with Boris over going into a different tier and the rest. Now, the idea was that those in tier 3 were going to be legally required to close down their business. So on that basis, they were going to receive a cash grant based on their rateable value of their business premises. So I think some businesses did go into, or some areas that go into the various tiers. Now, if that happened to a business, then obviously they should be entitled to these cash grants. Now, they introduced the tier 2 one later on after the first one, because they realized that with a tier 2, although they went under full lockdown, it was more like reduced occupancy of businesses. So you had less, let's say, patrons going into the pubs or restaurants and the rest. So they then introduced the second cash grant as well. So if your business basically, based on its business rate, value and the rest, you could have these amounts being paid to you on a monthly basis. Now, that was before the lockdown came in. So the HMRC later on announced that there's been a backdated claim for periods between August to November. So if you were in any of the tiers within tier 2 or maybe tier 3, then these amounts are what you can probably claim from. I think the money should be coming from the local authority.
Yeah, I believe that the local authority should be contacting businesses that are eligible. If you have not heard from a business, I mean, certainly if you got a grant back in March or early April, they should be contacting you again. If you believe you were eligible, i.e. you had business premises and your rateable value is, as shown on the screen, then you can contact your business. It's important to say these grants are only for businesses based in England, but the last time the government has given money to the devolved authorities in Wales and Scotland, so there will be support available for businesses as well through that. And again, obviously, at the moment, the second lockdown is only for England. So Wales has just had its recent fire break. Whatever, if their business was required to close, there will have been support available from the Welsh government, and similarly in Scotland, they're currently just on a 5-tier system. I think 5 tiers must just be crying all the time, but it's certainly, this support for the grants is for businesses in England rather than the devolved authorities. The other support that's available, so we mentioned earlier there was a delay to VAT payments for a few months earlier in the year. You can now pay back any VAT that you were not that you didn't pay during the deferred period. The government have announced that there's you can pay it back in interest-free instalments during the 21-22 tax year. There is already in place a reduced VAT rate for hospitality and tourism industry, and that is extended now out to the end of March 21. So they're paying a reduced 5%, I think, is it, Michael?
Yes, 5%.
5%.
From 20 to 5.
Yeah. There's also, you can delay filing your company accounts. So Companies House have, I think, is it 3 months, the delay that they're giving automatically, Michael?
Yes, they brought in a 3-month automatic extension. Originally, when it came in March, you had to apply to Companies House, but then since they realized it was going to be an ongoing thing, they introduced an automatic extension. So if most people check their Companies House maybe account, you'll see that you've automatically been given a 3-month extension. Quickly on the VAT rate reduced one, it doesn't cover alcohol. So that's one thing that people need to know.
Okay. And with the company accounts, the advice that we've been giving our clients is, where you can, do complete your company accounts by your normal deadline. And the reason that we've been saying that to people is it lets you know what your corporation tax liability is going to be, which is important. And slightly oddly, I think, although they have delayed, Companies House has delayed the filing of your company accounts, the corporation tax deadline has only been delayed if you ask for it. So we have been suggesting that people should be getting their company accounts completed by the usual date, partly because it lets you know what your liability is going to be, and secondly, so that you then know whether or not you want to request a delay and how much the delay is going to be. So I think it's important to say that that's the advice we've been giving our clients. The self-assessments, as I mentioned earlier on, the payment that would have been due for most people in July was deferred, and they've now announced that it was originally deferred to the end of January 2021, when you would have had to pay two effectively in one lump, your payment on account and your normal payment. They have announced that if you want, you can extend that payment. So you definitely still have to submit your self-assessment by the 31st of January, as you usually will. But the bill, the tax bill, if you need to, you can defer it for 12 months across the 21-22 tax year. if your total bill is going to be less than £30,000, then you can just apply online and you'll automatically be given an extension. If it's more than that, you need to contact HMRC to arrange an extension. The only thing, again, that we'd say on this is, if you can, we have been recommending that our clients do pay their tax bill in January. Although you can get time to pay, there is interest to pay on those time to pay arrangements. And if you can afford it, all you're actually doing is putting the problem off to later. So again, unless we would usually recommend to our clients that they do pay their tax bill when it's due. We briefly touched on universal credit, but as I said, that's not really the focus of this webinar. Simply to say, if you aren't eligible for either of the other schemes, then beyond a loan, universal credit is going to be your only fallback. And unfortunately, they have announced that universal credit is set at a higher level, and there's something called the minimum income floor with universal credit, which they temporarily suspended, and that basically meant that it was more likely that self-employed people would be able to claim universal credit. But it's very complicated, probably a subject for its own webinar, and not one that we're going to cover more in this one. And then if you have a mortgage or you have other loans, you are able to apply for payment holidays. You're allowed a 6-month payment holiday, whether or not you've had one before. So you can either top up your loan to 6 months, or you can apply for a new one. Top up the payment holiday of your loan repayments. And then the government previously announced a stamp duty exemption. So properties worth up to 500,000 are not paying stamp duty. That's in place until March 21.
Just
anything more, Michael?
One.
Sorry.
Yes, on the stamp duty, those who are not paying are first-time buyers. I think we need to clarify that. If you've already got, let's say, a first property, I mean, your additional property would basically mean that you would pay something on the 500,000. Okay, so that's, and then also on the self-assessment payment. Now, if you want to spread it, one of the conditions is that you shouldn't have any other tax debts. So assuming you've got a VAT bill you haven't paid, or maybe some kind of corporation tax bill you haven't paid, and the rest, that might influence the decision whether they allow you to spread a payment or not. Okay, thank you. We talked about the statutory sick pay rebate. This means that actually you can get money from the government much sooner if you need to pay sick pay for your employees because they're off due to coronavirus. There is a Kickstart scheme, which is grant funding of up to £6,500 per young person that your business takes on. A young person classes between 16 and 24. There's also a £2,000 payment for called an apprentice payment. This is, both of those two things are an attempt by the government to mitigate the effect on young people who are currently really struggling to find work if they've just left school or anything like that. There's a £500 support payment for those testing positive for COVID if they have to isolate, as long as they're on a low income. That's based in England. That would normally mean that you were probably already in receipt of universal credit. So this is intended to ensure that if you are asked to isolate either through test and trace or because you have symptoms, that you're not penalised for having to do that. And then we've got this link here for all of the business coronavirus support finder, just to see the support that's available to you. So that's sort of where we've got to with all the support that's available. I'm just going to move on now. That's the sort of the first half of our coronavirus thing. I can see there's just one question that came, or a couple of questions that have come in so far that might just be worth us
touching on how does the current furlough scheme differ from the original. There are a number of subtle differences, but probably the most important difference, I think, is that the original, right back in March or April, the employers didn't have to cover employers' national insurance or pension auto enrollment contributions, but actually since July, I think, Michael, is it? They have had to cover those. So that's probably the main difference. But anyone who has been using the outgoing furlough scheme, the new furlough scheme that's in place from the 1st of November is very similar, just the employer does still have to pay employers' national insurance and pension auto enrollment contributions. And since the actual original scheme, the government brought in this notion of flexible furlough, meaning that you don't have to furlough an employee for all of their hours. You can agree for them to work some of their hours and make a claim based on just the hours that are not worked. There are very complicated rules about how you work out what normal hours are. We can't really cover them in this webinar, but we have got that information on our website, and HMRC have also got it. And then there was a comment, question saying, I had to make someone redundant at the beginning of October. They had a redundancy payout. Can I now re-employ them? So I think we
Yes.
had some info. I mean, the simple answer is yes.
Yeah.
To that case, you should be able to re-employ them.
The date they gave was the 23rd of September. So since this person is saying they made them redundant beginning of October, that basically meets this requirement anyway, so they can re-employ. Now, one of the things is that there might be an extra cost to the employer in terms of national insurance contributions and then pension. These are the things that the employer is meant to pay. But then if the good thing is that by re-employing the person, it's helping them out anyway. But the employer can avoid some of these costs by simply, if the employee decides to waive their rights to, let's say, or maybe being signed onto the pension scheme and the rest, that saves the employer from making that extra contribution. And then also, if the employed person or the re-employed person is basically being paid below the NI threshold, the employer doesn't have that extra cost as well. So these are the only two things an employer is looking to pay on top of the government. Yeah,
and that second point that you made there about below the NI threshold is more likely to be for people who are perhaps part-time, or maybe for a limited company director who's paying themselves a tax efficient salary.
Yeah.
I think the one thing that HMRC have been really clear on is that any grant that you receive from them must be passed on in full to your employer. It cannot be used for anything else by the business.
One of the things they've also mentioned is that I think in December they'll be publishing a list of businesses making claims under the furlough scheme, so that employees can basically look up and see whether their companies are on there, and then contact either the employer or HMRC.
Yeah.
If they're not
so I have seen sort of questions about from people saying, does that mean that, you know, as an employee I could offer to pay my employer's national insurance costs and things like that? And I think HMRC are saying no officially on that, but we've got one final question. Can I claim for the furlough scheme if I haven't before? So for claim periods after the 1st of November, the answer is yes. If you haven't claimed under CJRS, for a claim period that starts after the 1st of November, as long as you meet the other eligibility criteria, yes, you could claim. For the outgoing scheme, you haven't been able to make any new claims since I think about July time. So if you hadn't claimed on the old scheme, it's too late to make any claim for the period before 1st of November, but post 1st of November, you can make that claim. So what we're going to do now is sort of move on to a little bit of how a business is going to come out of this. So I think one of the most important things for any business is always cash flow. And if you haven't ever had done any cash flow forecasting for your business, then although it sounds complicated, it doesn't need to be. We've got a simple cash flow forecasting spreadsheet. And what you basically do is just enter all of the things that you know, all of the cash that you know is due to be coming into your business, such as payments of invoices and things like that, and any outgoings you've got, such as rent or power, energy bills or phone bills and wages and things like that. And if you use a spreadsheet, you can then actually predict what your bank balance is going to be. Obviously, you need to make sure your bank balance stays within agreed limits with your bank, otherwise you're going to be faced with some hefty costs. But this is where things like, a cash flow forecast can help you decide whether maybe a loan will actually help get you through this period, and the bounce back loan is going to be then a cheap and quick way to be able to access that money, so that you can ensure that your business will have enough cash to function. Because one thing that will definitely kill a business is not having cash. It's important, if you do a cash flow forecasting, you can then see whether there are any outgoings that you could delay. So could you shop around for better energy rates or phone bills? Are there cheaper suppliers that you could get for consumables or other things that your business needs to work? Can you agree delayed payments with any of your businesses that supply you? And obviously, are there costs that you can do without? Hopefully that the coronavirus job retention scheme should mean that doesn't necessarily mean an employee, but are there other costs that your business has that you can do without? How can you cut your costs? So I would recommend, if you aren't doing it already, that you do start forecasting your cash flow. Is there anything that you think we should add to this slide, Michael?
No.
Yeah, I mean, don't be afraid when people say things like cash flow forecasting. It's most simple. It is literally, what are you expecting to come in and go out, and are you going to have enough money to cover that, and what are you going to do about it if it looks like you won't have enough money? A stitch in time is always worth its. I don't know, I've forgotten what the end of that phrase is, sorry.
Stitch in time saves 9.
Saves 9, there you go. I'm going to hand over to Michael to cover some of what you're going to need to do in terms of accounting for any grants or loans received.
Yes, thanks, Jake. Now, we've received the funds as a business or as an individual. We need to account for those amounts. Now, all of these grants are basically taxable. So for it to be taxable, it basically means that it needs to be in your account. So be it your company accounts, or it might be your sole trade accounts. Now, the main thing to note about these things is that there are two accounting bits to worry about anyway. There's matching concepts, and then there's the accrual concepts. You wouldn't get an accounting qualification out of this, but then just to explain it, now, the grant you are getting is basically income or revenue in your business. So it needs to be matched to what the expenses are. And the expenses in this case are going to be your salaries, or maybe your employees, director salaries, or maybe it might be the employee salaries anyway. So if you record the grant in your profit and loss, but without recording the salaries in there, what you then have is that your profits will be overstated and you'll be paying more taxes than you should do. Secondly, there's also the accrual concept. The accrual concept is simply about recording or recognizing the revenue or the expense in the correct period. So if the claim is for, let's say, the month of, let's say, November, that is what should actually reflect in your account. If you don't put it in that of November, but then it appears in December, it becomes, it's actually in the wrong period anyway. However, for the SEISS, the government has basically stated, or it's in the Finance Act, that all of the income received must be recognized in your 2020-2021 self-assessment. So all of the SEISS grants must be on your tax return for the 2021 tax year. Now, that basically overrides the accrual concept in this case. You don't need to do anything as a sole trader. For businesses, limited companies, it might be different. However, for your CGRS
Yeah, so that's the sort of the difference between when if you're a sole trader and you've got grants under SEISS, even though a little bit of the first grant was actually for the period of March and April, any grants that you receive, assuming that there are only 4 and that the last one is made sometime around March, all of the 4 grants, if you're entitled to them, would all be in your self-assessment for the 2020-21 tax year.
Yeah. Now, on the loans, you don't need to worry that much about the loans, because loans are basically split into 2 bits. There's what we call the principal, and then there's the interest bits. The principal, as we were saying earlier on, is the amount you would have borrowed from the government or the bank anyway. So in this case, if you went for the 2,000, the 2,000 is what would be on your balance sheet. The point here is that the amount that would reflect in your P&L is going to be what we call the interest. So the loan, or let's say the split into principal and then the interest. Interest basically is an expense that should reduce your tax bill anyway. So that, again, you need to be able to account for it in your P&L. Otherwise, you will end up paying more than you should.
Yeah. Okay, so simply on that one, your loan interest is also an allowable business expense, isn't it, Michael?
Yes.
Okay, so we've touched on keeping on top of your cash flow, but it is one of the most crucial things for any business. You really do need to do that. The next point that we wanted to talk about is working from home. So many of us are having to do this. I'm actually in our Crunch office today because I couldn't rely on a child not bouncing around loudly behind me. But Michael seems to have his children much better trained. They're either tied down or taken out. I'm not sure.
Go to the door.
But if you're working from home, there are obviously some more expenses that you might have. There are tax allowances. Michael, did you want to touch on what these were?
Yes, some may have already started, but then if you didn't start earlier on, you could claim either £4 a week or £6 a week. The £6 a week is for the current tax year we are in, so the 2021 tax year. But then for those who probably started sometime in March, you could claim £4 until you got into the new tax year.
So that's for limited company directors, isn't it?
Yeah, limited company directors. Now, there are 2 options here. Either the employee can claim from their employer, and then the employer basically records that as basically an expense in their account, or if the employer, as we were talking about earlier on, cash flow is a bit tight in the rest, the employer can simply ask the employee to go onto HMRC's website, and then you can claim directly from HMRC. Now, for sole traders, it's slightly different. The amounts are slightly different in that the amount you can claim ranges from 10 to 18 to 25 pounds a month, depending on how many hours you're working a month from home. So those are slightly different.
Okay, and it's also probably important to say that as a sole trader, you should already, if you work from home anyway, you should already have been claiming these, so that there's kind of no change for you. It's only the sole traders that perhaps maybe worked in a shared office or had their own business premises. If they are now working from home, then they now actually could claim for new, could be a new expense that they can claim. The other thing we wanted to talk about, I mean, obviously one of the things that this pandemic has made us realize is that, the worst thing that you think could possibly happen actually could. I mean, no one would have expected 12 months ago, except maybe Bill Gates, if you believe some of the crazy rumors, no one would have predicted that we would be in this situation only 6 or 7 months later. At Crunch, we've for a while we've been making a business continuity spreadsheet available. It's just a simple document that actually sort of asks you a number of questions about what would you do in situation X, situation Y. If you haven't got one, we definitely would recommend you downloading one and completing it, because I think we can all agree no one could see this one coming, and there are a number of things that you could probably do differently now if you had been a little bit more forewarned or at least prepared for them, thought about what you might do, things like, you know, have you got good Wi-Fi at home and things like that. But yeah, I definitely would recommend getting a continuity spreadsheet together. And then finally, I'm going to get Michael to talk a little bit about how you, I mean, no one wants to be a business that has losses, but there are some things you can do to mitigate those losses from a tax perspective, aren't there, Michael?
Yes. I mean, having less or no revenue would eventually lead to losses, especially if you've still got ongoing expenses. Anyway, it's inevitable. Although it's not a good thing, losses also from a tax point of view have got their advantages anyway. Losses from a company point of view can be carried back to relieve, let's say, corporation tax from the previous year. So imagine that you probably paid £10,000 or so the previous tax year, but then you're struggling this year and you make a loss. In terms of accounting, we can then carry back the loss for the current year to your previous 12 months, and then reduce or claim back some of the £10,000 corporation tax you pay. It depends on how much the loss or how big the loss is anyway.
But it's tax relief that you know, it's effectively a tax rebate that you may get back if your business has, if your limited company has made a loss and you previously had paid corporation tax.
Yes. The loss can also be carried forward into the future. I mean, if you haven't got a previous trading year. For some businesses, unfortunately, may have closed permanently, but for those who've closed permanently, the losses can be carried back to the 3 previous years. Okay, so if you're still trading, the loss can be carried back for 1 year, but then if you are closing permanently, the losses can be carried back to the 3 previous years. For sole traders as well, there's something we call sideways relief, in that if you made, let's say, a loss in your sole trade business, but then you did have some, like maybe a part-time job or anything of that sort, that loss can be used against whatever taxes you've paid through your employment. So your part-time job, you may have paid taxes. Let's just assume for argument's sake, your PAYE tax was probably around 3,000. That loss can be used to release some of that, and then you get a rebate as well from that. Losses can also be carried forward as well for sole traders.
Yeah, it could be quite complicated, but that's, you know, why accountants exist. So if you have any questions on these things, then please do get in touch with Crunch and we'll see how we can help. Got one question, Michael, just about the working from home allowances, saying, can the claim for working from home be backdated to March? I think there's probably 2 ways to look at this. There's how that affects employees, or how that affects sole traders. So do you want to take employees first?
Yes, I mean, for employees, you can, if you're talking about March is part of the, what tax year would it be? 1920 tax year. So they can still claim that in a way if they are doing it directly with HMRC. HMRC has got a portal, you go in there and then you simply claim it. If they want to dispute it, they can obviously make you aware instantly. For the current year as well, you can use the same portal. If the employee is claiming from the employer, employers may have their own policies. I know for, let's say, Crunch, for example, you might be told that probably if you don't put in your claims within a month or so, you can put in the claim. So it depends on the individual employer's policies. But then from, let's say, a tax point of view, I would basically encourage employers to probably allow that, because obviously it reduces their corporation tax bill anyway.
Yep. So if you're a limited company, if you're a limited company director, yes, you could backdate those taxes all the way back to March those expenses all the way back to March if you haven't if you haven't claimed them already. If you're a sole trader, then you'll shortly be doing your self-assessment if you haven't done it already for the 1920 tax year. So yes, you could put expenses in for working from home from March, and for the tax year that we're currently in, you'll be able to have any working from home expenses in your next self-assessment. That's correct, isn't it? Okay. I think that's pretty much the things that we were going to cover off. There was one question that's just come in saying, how do you claim the tax back from businesses with losses? I don't know if that came in before Michael made his explanation, but if you are a limited company that has made losses, if you've previously paid corporation tax, then you may be able to get a rebate on some of that. If you haven't previously paid corporation tax, then as Michael said, you would either be able, if your business carries on trading, you would be able to claim it against future corporation tax bills, or you may be able to claim it against some other taxes that you may have paid if you had any PAY income. Is that correct, Michael?
Yes, in terms of how you go about it, it's all done on the tax return. So not to bore you with too much detail, for every company accounts we file, there's a document filed with HMRC, which is a tax return anyway. So if we can imagine that you want to claim the one for the previous year for a company, you will need to file 2 tax returns for, let's say, the current year you're doing. There'll be one for the current year, which basically shows the loss. And then there'll be one for the previous year, which is going to be an amended tax return that basically says that we are restating, let's say, the tax return we filed for the previous year because there was a loss in, let's say, year 2, and that loss was basically X amount. We've used a proportion of maybe that's loss in the tax return for the amended one we are filing in year 1, and that is basically submitted to HMRC. For sole traders, obviously, if they've already filed their self-assessment, it's going to be the same principle anyway. You can just amend a previous self-assessment to basically state what's the loss. Okay.
It's rather complex and probably worth speaking to an accountant.
Yeah.
Okay, we've got 2 minutes left. Ben, are there any more questions?
I think we've got one more. I'm not sure, I presume this is aimed at you guys, but what's the one bit of advice you would give a small business in today's climate?
Don't panic. Make sure you're claiming all your expenses. Make sure that you're claiming all the support that you can. And plan for the future, plan how you're going to trade your way out of it.
Yeah, I think it's also about delaying payments where possible. So taking advantage of, let's say, the delays to, let's say, the VAT payment or self-assessment, tax payment, and the rest. And then also trying to maybe claw back income from clients as well as early as possible.
Yeah,
that basically improves your cash flow.
Yeah, I mean, I think all of those things are coming down to cash flow.
Yeah.
So probably the one bit of advice would be make sure you do keep on top of your cash flow. So we've got some useful resources. We've got the gov.uk website. We've also 123reg have put a page on their website where I think these slides are going to be available, and also links to the resources that we're talking here. But we've got guides that Crunch have produced to try and make sense of the vast amount of information that's on the Gov website. We've broken it down to the CJRS guide, a bounce back loan guide, and a self-employed income support scheme guide. And then we've just added in a couple of links to our cash flow forecasting spreadsheet and our business continuity plan for you.
That's great. Thank you, Jake and Michael. We are at time now. If any more questions do come in the next few minutes, we'll make sure we add those to the resources on the landing page itself, so you can get access to that information and insight from the team. But thank you both for the time. Thank you to everyone for attending today. Just a reminder that the session was recorded and you can get access to that at your leisure. And all the links and resources are on the landing page as well. Thanks everyone for the time. Thank you very much.
Thank you. Thank you. Thanks for attending, everyone. Thanks for inviting us.
Thanks.